Our senior equities contributor here on the network, taking a closer look at OpenAI and those reports that they may be delaying the IPO till 2027. Do want to welcome in our next guest, though, joining us, Suzanne Porske, founder of Phoenix Financial Group. Suzanne, great to have you back on this show. Last night we did our mid-year market outlook for Schwab, and I got the thoughts on all of the Schwab experts on what they're looking at as we head into the second half of the year. So I'd love to get your thoughts on how you're looking at the back end of 2026.
Well, you know what, and just what you were talking about, I think the investor sentiment is totally changed. I don't think it's like it used to be that the money was flowing so freely and everybody was jumping on things and everything was moving so quick. We just watched this, as you just said, with it's dipped below the original IPO. I think people are pulling back. Some of them are still part of that hype, but for the most part, people are pulling back and being more, I would say optimistic, but just very cautious of where they're going. And I am hoping that people start looking at the infrastructure to all of this AI conversation, like you were just talking before. That's where everything's going to be, I think, more consistent. And it's not going to be all this hype with these huge IPOs coming out and then all of a sudden pulling back so quickly. And that's what I think we're going to see in the market. At least that's what in my little portion of the world in the middle of the United States, and my demographics, which is typically a lot of women, and they're maybe put a little bit of that fund money and extra stuff into these IPOs and into that part of the AI boom. But for the most part, they're looking at the energy sectors and not just oil, but they're looking at electricity, what's powering or going to power this AI movement that's coming. Also, I'm seeing a lot in the banking, because now my clients and a lot of these baby boomers are happy that they finally have some options with their income. You know, they've got interest rates that are now appealing to them at the banks. They have now some annuities that have some really great crediting strategies. They're really excited about the safe and consistent income that they're able to provide themselves.
And I'm glad that you highlighted the change in rates, and many of your clients have watched how significantly they've changed from high to almost zero rates and easy money. We're back up to high now. We have the potential for some sticky inflation here. So as we look at that, how has this changed the investing playbook?
People are more conservative. At least anybody under my, in my audience, under my voice, I'm saying let's be proactive. You can still have some fun money and do that, but everything is changing. The market is changing, and let's get some consistency and you and I have talked about this before, with this huge 34 trillion that's getting ready, and it's in the process of being handed over to the female gender. We do things different. We invest differently. We still want to be a part of that game. But it reminds me of the gold rush. You've got two winners. You got the people that were finding the gold. I'm guessing it was a lot of women that were creating the shovels and selling those shovels and all of that. And that's really what the AI and how I educate my market. Let's pull back and look at what's going to power all of this, the infrastructure, the energy of it. And then again, the banks right now. The income in the banks is something we haven't seen in 10 years. And that's where they're liking that consistency. They're liking that safe place. They're not going on these hypes and the highs and lows.
And Suzanne, in the notes that you sent over, you said that you're encouraging investors to focus on trends that are unlikely to disappear. So as you look at the landscape here, what secular themes are giving you the highest conviction over the next, say, 5 to 10 years?
Even housing, with the new bill that was just passed. There's a lot packed inside of there that I don't think anybody has yet to really uncover this week and talk about. But they're really incentivizing modular homes, making it easier for people to build the houses, so we have a surplus of it. So the housing market will start to get more fluid. So I'm telling those people that are out there, my clients that are out there, let's look at this. It's going back, Marley, is what it reminds me of. When we first started, like in my generation, your first house was just that starter house. It was almost like climbing a ladder. You got that first one, you're there, then you sell it and you go up and you go up. Anymore, it's been they can't even get to the first rung. And I feel like with this new bill that's been passed, they're pulling that back and making different opportunities available to people to start buying into the housing market again. So that's one of the trends. Definitely income, getting more consistent with that. And then again, AI infrastructure and energy. That's where I am really seeing it. That's where I'm educating my client base, is in that area.
And you just mentioned energy there, but you bring up a good point about the importance of the distinction between investing in oil and investing in electricity. So as you look at the energy sector, where are you seeing opportunity?
In the electricity part of it, in these data centers, I'm in the middle of the United States, as I've shared, and so we have a lot more land out here. So we have these bids going on and fights going on, and trying to get the semiconductors and get all of this into the United States, buy this land up and get these places to house all of this AI. And so that's what I'm telling people: pull back away from the headlines and all the hype, and let's see where they're going to land and what's going to power all of this. That's where you need to be. You need to be in that instead of this. I love SpaceX. I have nothing against it, but all the hoop and holler. My phone rang nonstop for 48 hours. I'm like, okay, I hope this is only 48 hours and not like we used to, which was the latest, greatest trends. Pull back and let's talk and have a reasonable conversation of what this looks like for the next 10 years.
So if we want to try to stay away from some of the hype, take a more cautiously optimistic approach here, then what does it look like to be selective in this environment, Suzanne? How are you walking your clients through these conversations about choosing the right names? Is it stock specific? Is it sector specific? Or does it depend on which area of the market we're talking about?
Well, I'm a woman and I have a lot of these baby boomers and a lot of people that I am an ETF. I'm saying let's go and let's hover over some of these sectors. Let's hover over the sectors of infrastructure, hover over the sectors of energy, hover over the banking sectors, because those things aren't changing. People are borrowing money, so there's fees with that. There's fees with having the checking accounts and investments, all of that. So that's where that income is coming from on the banking part of it. Again, I'm more of an ETF instead of just a single IPO or a single investment and single stock. Not that I'm against it, and I tell people, let's play with your money. I do the rule of 100. I'm 60, so I take 60 from 100. So 60% of my portfolio should be conservative. That's how we look at it as a financial advisor. 40%, I can have maybe a -10, -20 floor, but that 60% has to have a 0 floor. In order to do that, we do need to be more conservative, and we need to be more proactive and look at what's going on in the next 10 years, not just the next 10 weeks.
Suzanne, it's always wonderful to talk to you. I hope you have a great weekend. Thanks for joining us this morning.
You too.
Suzanne Porske, the founder of Phoenix Financial Group. And we